Good afternoon, everyone. I would like to welcome you all for Q1 FY23 results conference call of Ahluwalia Contracts India Limited. We thank the management for giving us the opportunity to host the call. From management, we have Mr. Shobhit Uppal, Deputy Managing Director, along with Mr. Vikas Ahluwalia, Executive Director, and Mr. Satbir Singh, Chief Financial Officer, with us. Without wasting much time, I would now hand over the floor to Shobhit sir for opening remarks, and then we can have a Q&A session. Over to you, sir.
Thanks, Raman. Ahluwalia Contracts India Limited, an EPC company, has announced its financial results for Q1 FY23. During this quarter, the company has achieved a turnover of 609.24 crores and a PAT of 37.78 crores in comparison to a turnover of 580.09 crores and a PAT of 34.79 crores in Q1 FY22. Company has registered a year-on-year growth of 5% in revenue and 8.59% in PAT over the corresponding quarter of the previous year. EPS of the company for Q1 FY23 is rupees 5.64 as compared to rupees 5.19 in Q1 FY22. During Q1 FY23, the company's EBITDA margin is 11.13% as compared to 11.42% and a PAT margin of 6.2% as compared to 6.00% in the corresponding period of the last financial year. Net order book of the company is 8203.91 crores to be executed in the next 24 to 30 months. Total order inflow during the current year stands at 2864.13 crores. In addition to this, we are L1 in projects amounting to 792.88 crores. So, we are ready for questions now.
So, should we open the floor for questions?
Yes.
Sure, thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hi, good afternoon, sir. And congratulations on a very, very good set of numbers, sir. Especially on the order inflow and order book side. So my first question is the order book is very sizable, but the first quarter our revenue growth was slightly tepid. So we are still maintaining the 15% growth and 12% EBITDA margin for the entire year. Is that correct, sir?
Yes, we are.
And so given that we have already have a sizable order book, do we expect still to bid for the projects, or do you think we can take a pause for a couple of quarters or less for this entire year, fiscal year?
We are bidding, but we are bidding conservatively, and we are picking and choosing our projects on which to bid for.
And sir, can you please let us know this L1 order of 792 crore, the nature of this order?
So there are two projects. One is the Tata Cancer Hospital project in Mumbai, which we've been in L1 for some time. That because that project is slightly over budget, that is pending approval. We are expecting it in this quarter. The second one is at the depot, the Mandale depot for MMRDA, which we are already doing. These are some additional PB works of approximately 69-70 crores, which we have just become L1 4 days ago. So that we expect to be awarded shortly.
So the major part is this Cancer Research Center from Tata Memorial, which should be around 720 odd crore.
Yes.
Is that the...
Yes, you're right.
Thank you and all the best, sir. Thank you.
Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1 on your touchtone telephone. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Hello?
Hi, Vibhor.
Yeah. Hello, sir. Hi. Good afternoon. Thanks for taking my question. And congrats on very strong order inflow that we have seen through the first quarter of this year. So my question was on the execution in this quarter. So I think we reported almost a 5% kind of a growth on a Y-on-Y basis. Given that the first quarter last year was severely impacted by second wave of COVID, the top line number seems to be a bit on the softer side. So any specific, and also, I mean, numerically, we are looking at around almost 600 crores of revenue in this quarter. Last quarter, we were at 730 crores. Of course, Q4 is the strongest one. But any specific reason that the execution in this quarter was a bit tepid in terms of maybe some projects maybe not picking up significantly, or some other external reasons that you might want to highlight?
So, a couple of reasons. One, a lot of EPC projects, which we have bagged on them, in the initial phase of the life cycle of the project, designing is something which goes on. So the execution, then picks up in the second phase or the second stage of the life cycle of the project. That is happening on some of our projects. A couple of our projects, though they were initially slow moving, but they've started, like the Veterinary University in Bihar and, a couple of hospital projects. While they've now started full-fledged, but, a couple of state governments continue to grapple with funding issues. So therein, 2 or 3 of our projects have slowed down. Thirdly, the first quarter, as you've seen historically, is the least in terms of productivity. So I see no reason if I was to plot our growth quarter on quarter over the past few years, we are confident that we will meet our projections of 15 to 20% growth, top line growth this year also. More so now, when the order inflow, last time around when we talked, aap sabka concern tha new order inflow pe, that has been addressed. The order inflow, as you yourself said, has been, we've almost met our target for the entire year. So now the execution, the focus is going to be on execution in the next 3 quarters. So as I said, we will achieve our target of 15 to 20% growth, top line growth.
Got it, sir. And similarly, sir, on the margins front, the commodity prices remain still quite at elevated level. So how do you see that playing out? They have cooled off in the last 1 month or so. So do we expect that maybe next quarter margins might still be at a similar 10% range, and from Q3 onwards, maybe we'll be able to report, take the margins up a notch to meet your guidance of 12%. So just wanted to understand the trajectory that you are expecting for the margins for the remainder of the year, and any other concerns in terms of commodity prices or other things that you might want us to be aware of.
I think that I see the commodity prices stabilizing, over the last 7 to 8 months of this financial year. And that is why we had given a projection of 12% as far as EBITDA is concerned. And we are going to get there. I don't see any major challenges there. From now till end of March, the only couple of challenges that I see, one is, in October, there is now an annual break that happens in projects in NCR on account of pollution. That is a challenge which now we tend to build into our planning. The other is, we are kind of keeping our fingers crossed that there is stability going forward as far as Bihar is concerned. With the ministry expansion today, there seems to be a continuity in the portfolios or in the ministries for which we are working. So hopefully, that should not be too much of a concern, but we are keeping our fingers crossed there. As far as Bengal is concerned, the government projects, 2 of the government projects that we were doing there, one, the Milan Mela is already handed over. A final bill is happening there. The auditorium is also slated for inauguration in October. So, we don't see a lot of risks there too. So that is, these are the challenges that I can foresee. Otherwise, I think we are in line to meet our guidance targets.
Great to hear that, sir. So from the last bookkeeping question, if I may, if I could just get the breakup of the order book in terms of all our usual, the residential and public private and the region-wise.
Yeah, again, your question.
Order book breakup.
Order book. This is commercial. This is 8.69%. Hospital.
8.69%.
6%. And infrastructure 7.77%. Institutional 35.51%. Residential 13.84%. That is sector-wise. And government 81.36%. Private 18.64%. And region-wise, this is East 36.88%, North 34.51%, and West is 18.72%, South 4.51%, and rest overseas 5.38%.
Overseas is 5.38%.
Yeah.
So if I missed out on the hospital segment, how much is that?
33%.
33%. Got it, sir. Got it. Great, sir. Thank you so much for taking my questions and wish you all the best.
Thank you.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir. And congratulations on a fairly good set of numbers this quarter and strong order additions. So to begin with, just want to get a sense on the political situation that we have in Bihar, and given the fact that Bihar makes up for a fairly large part of our order backlog, I mean, including this animal husbandry university project that we have. Do you see any risk to any of these projects? I mean, in terms of payments, or would you believe that there could be a situation wherein you could be required to go a little slow on some of these orders because you would like to kind of keep a check on the money that you kind of invest into these projects from your pocket or from the business?
Frankly speaking, I am a whole lot more comfortable today than what I was maybe a month and a half ago, because, there was palpable tension between the allies a month ago. But now I think the present dispensation is expected to, last till the next round of general elections, right? My personal feeling is that the government is much more stable now. And going forward, I think the fund flow would also be better.
Sure. Any of these projects wherein the money was supposed to come from central government, the project has been given by state, but then funding from central government, any projects which is a part of our order backlog of such nature?
So, the central government funding for, say, the Chhapra and the Nalanda hospital that we are doing is already been completed. Now it's the state funds which need to be pumped in. So, all the projects that we're doing, or the major projects that we're doing now, are sort of marquee and visible projects for the government of Bihar. We feel that, they will pull out all stops to make sure that before the next round of elections, these buildings are completed, like the veterinary hospital and university, which is about 890 crores. That is the CM's pet project. Nalanda Hospital is in his constituency. Chhapra, another large hospital, which is about 50% done. So we feel that the present government will be focusing on completing these projects in the next couple of years. So I think that augurs well.
Sure. And on so the order addition that we've done during the year seems to be a fair mix between public and private domestically, and we've had international order as well. I think till some time back we were not comfortable with private, especially on residential real estate side. And we have a couple of residential real estate projects in this quarter. So any change in thought process? I mean, why did we go for this international order why private sector makes up almost 30% of the total domestic orders that we've had during the year. So any change in the thought process? Have we started finding comfort with private orders now, or we would still be very, very selective?
So I have been mentioning to you guys over the last two calls that we've had that in the long term we would like to maintain a healthy mix, and we would continue to slowly build up our private sector portfolio while maintaining a proper due diligence on the clients that we engage with. If you see the order inflow from the private sector side, these are all marquee clients, blue chip clients. We won a data center from Adani. Just to mention as an aside, data center is an area of focus for us. We'd already executed one. This is the second one that we picked up. We picked up a large order from Bharti's Real Estate, the Alborz developers order that we've got. This is a large commercial development at the AeroCity. Bharti's pedigree is well known. Amity, they continue to be one of our top private clients. They've started the university in Bangalore. We are doing that. So these and such other large or stable private sector clients is what we continue to look at. Residential is still not a large focus for us. However, we picked up a small order from Suraksha in Mumbai, in Vasai. We are testing the waters as far as this client is concerned, and these are two orders aggregating about 140 crores. As far as the international order is concerned, this is in Nepal, and this is totally funded by the government of India. Hence we ventured into this. It's a prestigious building. It's the Police Academy, which is coming up there, and it's designed by CPWD, funded, as I said, by the government of India. And this again was a project where there was very limited competition because only an Indian bidder could back the job.
Sure. And two more from my side, if I may, please. One was how much is the debt and cash balance on our books as of June?
Yes, please.
Debt and cash balance.
Debt and cash and equivalent, sir.
11.91 crore. And cash and cash equivalent is 164 crore. And bank balances is 194 crore.
Sure. And so just one last, I think in answer to one of the earlier participants, you alluded to some payment issues with a couple of states. Bihar, you seem to be fine. You seem to be comfortable now. So which states would these be? Wherein you're still seeing some issues in terms of collections or payments?
So as I explained, Bihar and Bengal. Bengal, the government projects that we have. One is completed. The second should be completed in the next couple of months. Bihar, the last month and a half, there was, because of obvious reasons, the payment cycles were stressed. Now, with the present new government in place, we are hopeful that things will improve, keeping in mind the next round of elections a couple of years from now.
Sure. And just a small clarification, sir. This time in the order backlog breakup that you gave us, right, in terms of...
Your voice is not clear. Can you speak up, please?
Yeah. Is it better now?
Yes, it is.
Yeah. So the question for Satbeer, I think the order backlog that you gave us, either in terms of segments or geographies or public and private mix, this is for the quarter-end order backlog or the current 80 to 100 crore rupees of order backlog?
So it's the total order backlog.
For 80 to 100 crores? Yeah, sure. Thank you.
Thank you.
For future.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
So two questions. One, on the margin, you did say that you're looking at 12% for the year. But if you can just walk us through how you expect the quarters to pan out, because is the commodity cost inflation now fully taken care in terms of our price escalations, which gives you the confidence, or the revenue mix and the order mix is likely to be better, which will take us to 12%? Because in Q1 we were at 10%. So I just want to know how we get to the rate of 12% from the current 10%.
as I said, Ashish, the quarters, especially the H2, that the productivity will improve substantially, right? And the commodity prices have also more or less stabilized now. Plus the initial investment, a lot of EPC projects which we have done in this quarter will begin to yield results over the next 3 quarters or 2.5 quarters. So that we feel will drive up the margin.
Okay. Sure. The second is on the inflow. So obviously, the year-to-date inflows have been good. Yet, when I look at our, let's say, the expected turnover for 23, we might end up at somewhere between 3,100 crores based on the guidance. So do you think we'll need to actually go to an inflow of even more than 3,500 or 4,000 crores this year? Because otherwise then next year's growth again becomes a question based on the expected turnover for this year.
I think I'm not worried on that count because that should happen organically. We are just into the 5th month of the year or the 6th month of the year, and we are already, if you take into account the L1 projects also, we've already touched about 3,600. And this does not include, the increase in orders, the small increase in orders with our existing clients, which keeps on happening. Say, for instance, Bennett Coleman, for whom we are doing the university in Noida, they've already extended our order 10 days ago by another 60 crores. So, I don't foresee crossing 4,000 crores an issue. I think we should go beyond that.
Sure. So, actually, so what
in a nutshell, order book will not be a constraint in growth even next year.
Got it, sir. Yeah.
Pipeline
that's what I wanted. All right, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi, good afternoon, and thanks for taking my question, and congrats for very strong order intake. So my first question is on the order intake itself. Obviously, you alluded that including L1, we have won almost over 3,600 crores of orders. So how was the competitive intensity for all these orders? Was it better than what we faced last year, or was it broadly the same?
It was broadly the same.
Okay, and we would expect to make our 12% kind of margins on all these orders that we have won as well.
Yes.
Sure. The second question that I have is, it would be great if you could give us, you obviously alluded to some of the projects in Bihar and Bengal, but would be great to know the status of some of the other major projects that we have, like, let's say maybe AIIMS Jammu or Sion Hospital, the Chamba project, the poultry market project, and so on.
So, Chamba and Hamirpur, the 2 hospital projects are moving fine. This is for the government of Himachal Pradesh. In Chamba, there is a slight issue. The total order is about 290 crores, out of which, a small part is yet not cleared. There are trees there. This is for about 40 crores. So we are told that that should happen in the next 1 month or so. So we are looking to complete that project in the next 1 year. So within that period, this area should get cleared, and we should complete that also alongside the completion of the other portion of the job. As far as Hamirpur is concerned, we are looking to complete it in May of 23. So that's moving on track. We have recently won for the government of Himachal. Actually, it's for the central government, Education Ministry, a central university in Dharamshala, which is funded by the center again, but it is in Himachal. As far as poultry market is concerned, Vikas, you want to take them through the poultry market and the Sion hospital projects?
Yeah, sure. So the poultry market project is now it is back on track. It had slowed down for some time. because of there were certain decisions pending with respect to design and some decisions from the government. But now all is clear now, and we've completed a lot of work, and it's although the project is delayed, but then it's back on track. So that is the thing. And then Sion, the first part of the project is over, which was we were to make a transit building for about 50,000 to 70,000 square feet of space that we've already handed over to the Sion hospital management. And the other portion in that now, that there is a environmental clearance being awaited because we have to remove some X number of trees, a lot of trees. So that permission is due to come any time. And apart from that, the other side, although the work is still going on, there is a nursing building also, which is the work is going on at full swing. So time is on track.
Great to hear that. And lastly, bookkeeping questions for Sadhbir sir. So what would be your average cost of debt currently, and what was the capex that we incurred in Q1?
This is average cost of debt is 7.5%. And next question?
Capex. It's 12.2 crores.
I'm sorry, I didn't get that number.
It's 12.2 crores in Q1.
Sure. Thanks. That's it from my side, and all the best.
Thank you.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Congratulations on good inflows. So my first question is on inflows. So if I include the L1 order, which is stuck in some procedural issue and might get awarded soon, so we already have 3,600 crores in the kitty. We have almost full second half, almost 7 months, 6.5 months left for the year. So, 7.5 months left for the year. So what's the outlook on ordering? Typically when we see the second half to be loaded on inflows, so do you think this number crossing 7,000 to 8,000 crores for this year?
No, I don't see it crossing that number. As I said when I answered the first question, we're going to be conservative. But yeah, sir, it should be anywhere between 4,000 to 5,000. That's my guidance.
So it's a conservative guidance right now, because I think start of the year you were at 2,500, so we've already done 3,500. So,
yeah, it is conservative, yes.
Okay. So second question on your segment, so commercial, hospitals, infra, institution, and so just wanted to understand the commercial piece where we are seeing a major activity on the private capex side. Has been doing well and is expected to pick up significantly, and it remains only about 8.5% of our total order book. So how do you see, a large part of this market is south. So how do we see both the segment as well as the geography, which is the south, which is about 5% of the order book, ramping up over the next 1 or 2 years for us?
So yeah, it's a good question. I think at some stage I'd mentioned that we would start looking at the southern market once we had stabilized in the other geographies. So we have now, if you go through our order book, you see that we have recommenced operations in Bangalore. The Amity University, as I mentioned earlier, this is in Bangalore, in Devanhalli. Plus, we have also got an LOI for a medical college and hospital. It's a very prestigious work for Indian Institute of Science in Bangalore. So, going forward, we feel that at least one more project in this financial year, we will add to our portfolio in Bangalore. And then maybe next year we would then move to Hyderabad. That's as far as our strategy and planning in working in the southern part of the country is concerned. We don't see ourselves working in Tamil Nadu or Kerala as of now. We would look to stabilize in Bangalore and Hyderabad and then take a call in other regions of the southern part country. So as far as the east goes, we are now, even in Odisha, the Z1 project that we are doing, that seems to be picking up speed now. So we may look at other commercial or private developments there. As I mentioned in the answer to the earlier question, we've picked up a large commercial project from Bharti Realty. We are looking at increasing our private sector portfolio now in baby steps.
Okay. So these are the government sector orders which you highlighted. So, but your thoughts on the private sector, where typically the
what I highlighted in response to your question were all private sector orders.
No, I was more talking about office space, grade A's. These are like, I know these are like medical college and university, MIT University, but I was more like interested to know on the office space where there are grade A developers.
The order at the AeroCity is 2.4 million square feet.
I'm talking about South
commercial space.
South, I'm talking about South market, which is.
So as I said, we will now start re-establishing our connections with some of the stable developers that we've worked with in the past, and that is an area that we're looking at to grow again.
Okay. Because we need to also counterbalance some of our east and north, which is a sizable portion of the order book. So I think South is a very apt market, which is very healthy, and most of the projects are financially closed, and there are tier 1 developers operating out from there. So it will be a great counterbalance to have over the next couple of years.
Yeah, we're looking at that, but you know us, we'll always be conservative. We will not just to beef up our portfolio. We are not going to throw caution to the wind.
Okay. Just on the last question about competitive intensity, sir. So now we have seen very healthy inflows financial year to date. So do you think still, earlier you used to bucket these orders where up to a certain size is to say. So now how do you see the competitive intensity in this segment? We have very healthy inflows, and typically our conservative nature, we don't bid aggressively. So do you see the competitive intensity reducing even for the rest of the year? So if you can just give your views on the competitive landscape in the building segment.
I don't think overall, if you were to take an overview, I don't think the intensity is going to reduce. What we are also seeing is that phenomena of heavy infra players entering or trying to enter into building industry is, that is reared its head again. You see the Ashoka Buildcons or the Dilip Buildcons or the KECs of this world wanting to enter into building industry. So the competitive intensity for the rest of the year, I think, will remain the same. We will just have to be careful in how we do our due diligence and which clients we pick, and how we are able to zero in on projects or geographical areas where we feel that we will have an edge and can command a higher price. We have, say for instance, we have now, as a part of our organic growth, we've now forayed, since we've already had a strong presence in East, we have now taken a significant step towards the Northeast. We have picked up a project in Assam, a large hospital project, because we see a lot of funding from the center happening there. So there the competitive intensity was less, and I think it will continue to be less because it's not an easy area for, say, a company from the western part of the country or the northern part of the country to go there. You need to have experience of having worked for a substantial scale of projects in the eastern part of the country. So we are kind of leveraging that and moving forward.
But within your segmental, so how is the segmental bid pipeline looking now, sir? Because you had good orders. So how is it now? How does the segmental bid pipeline look now within the various segments? If you can just lastly, if you can quantify that. I'll give some time.
So as you yourself said, we see a significant increase in the private sector order pipeline, especially from large established. There is consolidation which has happened there across the country as far as private developers are concerned, and we are looking at a lot of our old clients reaching out to us again, even for residential projects, for which we are doing our due diligence and seeing who to engage with and not engage with. On the public sector side, the healthcare an area which continues to be a focus for the center as well as state governments. And there seems to be continual spending on the education side also. This is what I had mentioned in our last interaction. Education and healthcare seem to be still focus areas for the governments.
So we see this bid pipeline. What if you can quantify what is the bid pipeline? So traditionally, which has been there for us, and now we are also looking to expand in South and looking to add more segments. We said maybe in Hyderabad and maybe in private office side. So do you think organically our overall historical bid pipeline may multiply because of these two? So addressable opportunity will increase significantly for us over the next 2 years?
So it is increasing. One area which I failed to mention earlier is like there is this redevelopment of railway stations. Now, 12 or 13 tender NITs have come out, but we have stayed away in the first round because of our experience with the Charbagh station, if you recollect. That was a stillborn project. So we are still waiting to see whether there is adequate funding by the central government for all these railway station redevelopment projects. So there are such areas, even in building construction, infrastructure for building, that we see the government is taking steps to increase the capex. So I think the order pipeline will continue to increase over the next couple of years. And maybe a year and a half from now, the competitive intensity should also start coming down, because we are already seeing signs of stress in some medium-sized companies or smaller companies.
What I'm hearing is that redevelopment projects may come on under the HAM model, wherein you may require equity investment. So will you still go with that model, or you stay away from any equity-intensive model?
We will not. We, at the moment, no.
Okay, great, sir. Thank you for answering my question and all that.
Thank you.
Thank you. The next question is from the line of Meet Parikh from Anand Rathi. Please go ahead.
Yeah, thank you for the opportunity, sir. You have given the status of a few of the projects. For another few projects, the Jammu AIMS Hospital, what is the status on that project?
So, the Jammu AIMS project, we have executed about value-wise 500 odd crores, and at the moment the targeted completion is in September, October next year.
Okay. Then on the Kolkata affordable housing, so how is it going, that project?
That's picked up now. It's we are logging a billing of about 7 to 8 crores a month there now. So that's smoothly after the initial hiccups.
And on the Mandala Depot, you had mentioned during the initial remarks that you have received an additional order from them. So on the Mandala Depot, the main project which you had received, so how is the execution at that project?
Vikas, you want to answer that?
Mandala Depot, what is your any specific question, or is just a general thing?
Yeah, it's a general thing regarding the execution. How is it going?
Execution is going fine. I mean, it's all right. There's nothing.
And on course.
It's on track. Yeah, it's on track. It's on track.
And lastly, sir, on the Gardani Bagh project, so what is the status on that project? Gardani Bagh?
Yeah, it's a 510 crore project. We have done a billing of about 110 crores there. That project is now moving on track.
Okay. Thank you so much for that.
Thank you.
Excuse me, this is the operator. Mr. Parikh, we are unable to hear you clearly.
I'm done.
Thank you. The next question is from the line of Jitin Rishi from Axis Capital. Please go ahead.
Yeah, good afternoon, sir. A few questions from my side. So just one thing on the last quarter, you said there was the NIT Patna project which was in L1, 536 crores. So what is the status as of now, sir?
So yeah, that project has been awarded, And at the moment, it's an EPC project, so designing is happening, and we should be breaking ground on the project in the coming month, in September.
Okay, so from September we can see the execution, right, sir?
Yes.
So it is part of the order backlog, right? If I may ask so.
Yes, it is. It is.
And sir, a few details I would require on the closing order backlog of few projects. So I will be just naming the projects. Please help me with the closing order backlog as on June. So first is the Animal Science Bihar project. What is the order backlog, sir?
Can you specify?
Vasu.
Yeah, so Bihar Animal is the university project, veterinary project basically.
This is Bihar is 2,253 crores.
It was 890 crores, right, sir, at the last quarter?
As I said, Vasu, the execution is just started. And it has just started. And we have barely executed about 5% of the project.
Okay. Yeah. Sir, this Kolkata New Town project, what is the order backlog, sir?
Sorry, Calcutta New Town.
Calcutta New Town project, sir. Order backlog?
New Town project, the order backlog is about 90%.
90% is the order. So 10% you executed. What I understand from the aims, you said 500 crore executed. So right now the order backlog would be around
about 750 crores.
750 crores. Okay. Sir, and the old project of Chhapra and the Nalanda project, what is the status now, sir?
So as far as Chhapra
closing book,
we are looking to complete these projects by middle of next calendar year, and the value left in both these jobs is to the tune of about 150 crores each.
Basically, we have not seen much movement in Nalanda from the Q4. This Q4 it was 156, now it is 150. I understand.
Yes. As I said, for the past couple of months, 1.5 months.
I understand. Yeah, sir. Yes. Sorry, I'm taking your time, sir. But again, on the Sion, what is the closing order book, sir? Sion Hospital.
Sion, as far as the Sion Hospital is concerned, the remaining work is about 495 crores.
And this Mandale project, after the, I think the closing order book, if you can help me, then I will add the L1 portion, as you said in the opening remarks. So what is the closing order book?
324 crores. When you say closing, you're talking about the remaining order, right?
The remaining order, excluding the L1 portion.
324.
Absolutely. So this Bhubaneswar Z Estate?
Bhubaneswar Z Estate, 289.
And sir, this the Gardani Bagh, as you said, that it is picking up. But now, what is the closing order book as in June now?
As far as Gardani Bagh is concerned, 350 crores.
And sir, there is this Sant Nirakari project. So it was last 1 year back. So any progress on this project, or what is the status as of now?
This project is moving fine. We are logging a billing of 7 to 8 crores every month there.
So what could be the order backlog in June, sir?
50 crores.
Sorry, sir?
140 crores.
140 crores, sir. And sir, this Neporina commercial development for Neporina Ecospace, any movement, any closing book there, sir?
Yeah, that project, as far as our scope of work is concerned, that's over now. Yeah.
Okay, that 200. Okay, we had some 200 crore types. So this Chamba project, what could be the NBCC Chamba project order book, sir?
So as far as Chamba is concerned, the order book is 150 crores.
And sir, CPWD 240-bed hospital work in Hamirpur, what is the status now, sir?
170.
170 crores.
Both these jobs, as I said, will be completed by May or June next year.
Okay, so this Chamba and this both complete May or June next year. Okay. And great, sir. And sir, just one last thing I would like to ask you. So you said you can expect obviously 4,000 to 5,000 crore of inflow. That is really good. But any bid pipeline in terms of value which you would like to highlight, which key projects you are focusing, and what is the value and what can be the outcome? Like, when can you expect the bid outcome? Probably next 2 to 3 months in terms of value and size and the name.
So we're bidding, as I said, hospitals continues to be a focus area, both for the central and the state governments as well as us. So we're bidding for a few hospitals in Haryana. What we are seeing where the governments are the same, that is at the center and in the state, we are seeing substantial funding happening. Assam, we picked up a hospital. There are a few other institutional projects which are coming there. We are seeing some redevelopment projects, so CPWD happening in Delhi. Like Srinivasapuri, we bid for a job which was about 800 crores that was cancelled. It's come up again. Then there are, projects like Thal Sena Bhavan for the MES, again a large project for the military, 800 crores. So that we are bidding. I mentioned that we are bidding for DLF. We are bidding for, a client like Krisumi, which is an Indo-Japanese collaboration. So our pipeline is to the tune of about 5,000 crores as things stand.
This will include building the hospital mix.
Yes.
So this AIMS Bangalore project, what is the closing order book, or it has not started yet?
No, it's not AIMS.
Not AIMS, sorry, MET, sorry, my bad.
MET is a university. It's just started. We've not even broken ground. Mobilization is happening, so we expect to break ground in the month of September. We are looking to complete about 7 lakh square feet in the next 1 year, because they aim to start the university next year.
Okay, so basically this is a fast-moving project.
Yes.
So 1 year, you should be able to complete the project by next 1.5 years, right?
Yes.
So what is the value, if you can indicate?
As it happens with Amity, they build in at the moment. The awarded value is 150 crores, but from the time that they awarded, as you know, they are existing clients of ours. We do most of their developments across the country. So when they had awarded it to us, they've already scaled up in the last 1 month.
Value terms.
So I think our total value here, by the time we finish the total development, should be 350 to 400 crores.
350 to 400.
The same happened when we did the project in Kolkata. We started off with a 100 crore order, and we've actually, I think, finished close to 400 crores when the total FSI has.
So even this F-150 can go up to 400 crores. That is like a big jump. What we did in Kolkata. Got it, sir. So just last question from my side. What is the fixed price and variable price contract percentage in the order backlog?
15% is fixed price.
Okay. So this Nepal project is including variable portion, or it's a fixed price contract?
Nepal is. I'll have to get back to you on that, since it's a project which has been planned by CPWD. I think it has a variable price contract. There is a 10cc clause there.
That's it from my side. Thank you, and all the best, sir.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
So most of the things we have already discussed. Sir, couple of data points on the balance sheet front. So inventories as on June, trade receivable and trade payable value.
This is trade receivable is 419 crores, including current and non-current, and retention is 177 crores.
Sorry, inventory is 177 is inventory.
177 retention.
171 is retention. Okay.
And 167 for mobilization advance.
157.
167 crore.
167. Okay.
And unbilled revenue is 334 crore.
Okay.
And besides that, inventory 250 crore.
250 crore. And trade payable?
Including real estate inventory, 38 crore.
Sorry, sir, I didn't get.
This is inventory 250 crore. Out of which real estate inventory 38 crore.
Okay.
And WIP 334 crore.
334. And trade payable is?
Trade payable is 594 crore.
594 crore. Okay. And so, sir, you mentioned that overall bid pipeline right now is 5,000 odd crore. So, in that private share would be how much broadly?
Private share would be about 30%.
30%. Okay. And in terms of the race would be mostly would be the central government, or it would be 80% would be central government.
Yes.
Okay. So thank you for giving us the opportunity to host the goal. Thank you all the participants for participating. Sir, do you have any closing comments?
No, I think if there are any other questions that the participants have, they can reach out to our IR cell and we will revert back to them individually. Thank you so much, and looking forward to seeing you after when we announce the results of the next quarter. Thank you so much. Bye.
Thank you, sir.
Thank you, members of the management, ladies and gentlemen.